Ladies and gentlemen, if I could ask you please now to find your seats, and we're going to move on with our second presentation today, and welcome back to those who have joined us online. Opportunity to ask questions at the end of this presentation too, and to those online, please click on the Q&A tab and send them through. We'll be delighted to put as many as we can to Ken Brinsden. Ken is undoubtedly one of the great speakers on the ASX circuit. Going right back to his early days with Atlas, Ken, I think, admits openly he learnt from the master, David Flanagan, and he took some of those great skills and he polished them, and he's become one of the great speakers. One of the things that's great about Ken's presentations is not just the way he delivers it, but it's the fact that he gives us some great insights into this new world of EVs, lithium batteries and the like, things we all know just enough about to be dangerous, I suspect, but not much more. Ken, through his role at Pilbara, is at the coalface of what's happening in the world. He talks to the big battery chemical customers, makers all the time, the big car makers around the world. And I've always found that if you're going to seek out one person who can be the font of knowledge and give you simple answers to all those questions, Ken Brinsden is the man. On top of that, he's just an excellent bloke. He's been so successful at Pilbara. The company was, I think it's fair to say, pretty close to being on its knees at one stage when the lithium price was really down on the floor. And he, through some help between him and Tony Kiernan, they fought back, and it's indeed been one of the great success stories of the resources sector in Western Australia in recent times. Please welcome Ken Brinsden.
Well, thank you. Thank you, Paul. You're too generous. And Raoul, great to be in the sidecar with you today. It's my pleasure and Pilbara Minerals' pleasure to be speaking alongside Raoul and the Genesis team. You will not find a harder working CEO, MD than Raoul. And it should be no surprise that it was one of the longest overnight success stories you'll ever see, the Saracen story. And the main reason it happened was because of the hard work that Raoul put in and the passion that he showed for the company and his team. So full credit to Raoul for what's been achieved. And it gives me pause to think about what I should invest in, because if it relates to the people, then Genesis is as good as a sure thing. So thanks everyone for participating in Paul and Nick's Super Spreader event today. I'm completely safe, having already had the COVID experience, and I hope for most of you it's okay, because I can assure you we're all gonna get it at some point in time, and we all should be safe in the knowledge that we're fully vaxxed. But it's a pleasure to be in the room with you today, and for those that are participating online, thanks for joining, and a special shout out to Table 4 with the Pilbara Minerals team here today. So. About 20 minutes, 20 minutes worth of presentation materials, and then I'll look forward to the Q&A. And the key things that I'm drilling in on today really constitute the topical events of the battery raw material sphere. So focusing in on and drilling on the market dynamics, and obviously what's going on in respect of price. A bit about Pilbara Minerals' response to the demand equation. Absolutely phenomenal what's going on in respect of demand in battery raw materials, and completely reshaping natural resources globally. That shouldn't be underestimated, so I'll touch on that. And then lastly, a little bit about the future of our industry. Where is lithium raw materials headed? Because there are some changes coming. And I'd like to think that Pilbara Minerals is setting itself up to be at the front of that change. And I'll explain what I mean. For those of you that may not know the Pilbara Minerals story, apologies for those of you that know it all too well. We're set up in the North Pilbara. The Pilbara, absolute godsend of a place to work, just so well attuned to the mining industry, remote, but not so remote that you don't have access to services. Typically not so much competing over land use and competing interests in the area. Native title groups who are sophisticated, active, engaged with mining, and ultimately wanting to see mines succeed. And then, of course, you have the amazing port of Port Hedland, which is crucial for our business, the world's largest bulk minerals port, having exported, I think, about 700 million tonnes last year. So getting out our 350,000 tonnes of spodumene concentrate, you couldn't ask for a better place to be working in. So, yeah, really important by location and a big part of the speed with which Pilbara Minerals was able to get its mine up and running and respond to the demand equation that exists today. We now have 2 plants. Poor old Altura didn't make it through the last downturn in the cycle. We were, I think, opportunistic, took advantage of a difficult situation with the company, but now have the benefit of an aggregated project base, 2 processing plants, installed capacity of 580,000 spodumene concentrate tonnes. Spodumene concentrate, a bit of a mouthful, being the carrier of the lithium units. It's in the form of lithia, Li2O, and that's basically what we ship to the world. And that all is what heads out of the port of Port Hedland. It's a huge resource, a huge reserve, one of the world's great hard rock projects. There's only really 4 of them in good jurisdictions. Ours is one. Wodgina down the road with Mineral Resources and Albemarle. It sits about 40 kilometres to the west of us. The old Warhorse, Greenbushes, and coming through the ranks, the Mount Holland mine, now controlled by Wesfarmers and SQM. They're really the big mines. They're the mega mines. And it's not as though somebody's going to trip over another pegmatite, because they've all been explored historically for other things. They've been looked at, scraped over for tin, tantalite, now lithium, of course, mapped for the currents of gold, nearby nickel, you name it. They've all been assessed, well mapped, well understood. Typically everyone knows where these pegmatites are, in which case the idea that someone now finds another big one in WA, I think is probably at the lower end of the probability spectrum. Anyway, big resource, big reserve. It allows us to keep expanding, and that is our intention, especially in light of the demand conditions that are evident today. Now, price. It's incredible what's happening in our industry. And because a lot of you are gold bugs, I'm going to give you a reference point that I suspect will do 2 things. It'll shock you, but also explain how good the situation is today for Pilbara Minerals. Raoul, I don't know if I'm on safe ground, but let's say you said an average good gold price in the last 5 to 10 years was about $1,500 an ounce US, something like that. Let's use that as a benchmark. The equivalent average good price in the spodumene world would have historically been, let's say, $500-600 a tonne for our spodumene concentrate. To make the direct comparison, you have to take $1,500 an ounce to about $6,000 to $7,000 an ounce to appreciate how much spodumene has appreciated in about the last 12 months. I tell you what, Raoul would be swinging from the rafters, as pessimistic as he is about gold, if it was $6,000 to $7,000 an ounce. It's a far cry from the average days in the spodumene world, and it's in response to incredible demand conditions. Why is it incredible? I hear you ask. Well, somewhat embarrassingly, battery raw materials has been a net beneficiary of the COVID experience. Stimulus has been run through the global economy, and one of the big net beneficiaries was this concept around new energy, a catch-all for the combination of renewables, electrification, in essence getting rid of fossil fuels, and electrification of the transport industry, of which batteries are a key co-commitment because they facilitate electrification. The demand has gone through the roof to the point where it's a really, really big issue for industry today, downstream. If you're the average car or EV maker, if you're a cell maker today, you're just about hitting the panic button because chemicals pricing or value-added chemicals in the lithium industry have gone through the roof. They've seen their price go from as low as about $5,000 a tonne in September 2020. What are we in, 21, 22? Yep, 2020. To today, depending on where you are around the world, paying as much as $75,000 a tonne. And it's a big issue. It's a big issue for the industry. Now, why has it happened? Well, it's happened because the car makers were asleep at the wheel. They were not paying attention to the raw material supply base. They are too far removed. They were not focused on what it meant to create an interconnected supply chain that was going to supply them with enough raw materials as demand came back. And inevitably it was coming back. And today they've been caught short and they're going to have to pay through the nose to be able to access raw materials. It's going to be a big issue for them for quite some time to come. Well, what does all that mean for little old Pilbara? Well, of course, we're a net beneficiary, but in our own way, we've also contributed to improving price transparency. So we've changed the game a bit in the spodumene world, and we've motivated, absolute transparency for some of our trades by, in effect, running eBay for spodumene, the BMX platform. What we're doing is we're genuinely auctioning to multiple buyers on that platform. In effect, an auction, instantaneous auction, run over an hour or 2 hours, and the highest bidder wins the cargo for the known specifications. And of course, it's shocked everyone what's happened with respect to price. It hasn't really surprised us because we've seen how desperate everybody is starting to get. Anyway, the benefit that's derived from that is greater price transparency, which is a good thing, I would argue, especially in our industry where historically it hasn't been transparent, the effect of pricing. And it's motivated downstream pricing to appreciate as a function of that greater transparency. And here is where the rubber hits the road. So what you're looking at in this graph is the appreciation of, I'm colourblind, apologies, green and blue, I'm pretty sure. The line is the chemicals price in China. Now, we're focused on that Chinese price because that's where the majority of our exposure is. We sell about 90% of our cargoes into China. And over the period of shown in that graph, approximately 15 months, 9 months, sorry, my apology. Chemicals pricing's gone from $12,000 a tonne to, as per the graph, $70,000 a tonne. It's actually higher today, $75,000 to $80,000 a tonne. So massive appreciation. And correspondingly, spodumene has largely followed the same trend. In the first half of this financial year, we sold on average for a price of $1,250 per tonne. In the current quarter, in the March quarter, we've guided for pricing between $2,600 and $3,000 a tonne for cargoes sold on a SC6 basis. However, today's actual price is between about $4,500 and $5,000 a tonne, indicating the trend with respect to spodumene price. All of that translates very, very well to cash flow for Pilbara Minerals, especially as we continue to expand production. So our leverage to the China price is pretty much unsurpassed in the Western world. And actually, to draw a key anecdote there, our peers, global peers, SQM, listed in the US, Albemarle, again, listed in the US, they're high-fiving each other because they're getting $15,000 a tonne in the December quarter. Well, the real price in the December quarter was actually triple that. It was $40,000 a tonne in China. So if I was a shareholder of those companies, I'd be seriously motivated to jump on the investor hotline and ask them why they're not getting $40,000 at that time, $70,000 today. The reason they're not getting that price is they don't participate in the China market in the same way that Pilbara Minerals does. So being a merchant seller of spodumene today is absolutely fantastic business. And we represent one of the few stocks globally that is genuinely exposed to that pricing dynamic. So very, very healthy pricing and likely to stay strong for some time. A mine takes 5 to 7 years to get up and running. You can build a chemical plant and a car plant in less than 2 years. There is no comparison. So it's going to take quite some time for the mines to catch up. We have the benefit of a large resource and a large reserve. So we're going to keep chipping away at expansion capacity. Today, we're on the path between 360,000 roughly tonnes per annum through to 580,000 tonnes per annum during the September quarter. The uplift comes through the bringing back to life the former Altura assets that I described us purchasing back in early 2021. So we've been rebuilding some of that facility to make it more attuned to our method for spodumene recovery. And we're now bringing that back to life with a view to it coming on stream at full speed during the September quarter. And in fact, right at the very same time that price is, on the face of it, is peaking. In addition, we've got other projects on the boil to continue to keep expanding, ultimately getting us to 1 million tonnes per annum plus of spodumene concentrate. And to link that back to my earlier comments about there only being really 4 big mines, I guess that's the threshold that I'm alluding to. There's not many mines that are going to be able to produce 1 million tonnes per annum of concentrate or more, and Pilbara is one of them. So lots to look forward to there. Okay. Lastly, ultimately, where do we take Pilbara Minerals? Well, there is so much more to be done. And I kind of, that probably sounds a bit perverse, doesn't it? Because I've indicated I'm going to be finishing up. But if you turn that on its head, it also represents such a fantastic opportunity for somebody coming in, which is part of the motivation for making a reasonable transition today or this year for the CEO transition at Pilbara Minerals, because the company has never really been better placed. A really strong balance sheet, unbelievable operating cash flow, growth pipeline for production growth, but also for product diversification. Why is that important? Well, I can tell you that today, being a merchant seller of spodumene, so not having a chemical plant, that is a great place to be, because we're winning the lion's share of the margin from downstream because the raw materials are so short in the market. But it's safe to say that won't always be the case. In which case, what Pilbara Minerals should do is get positioned in the supply chain with a bit more diversification and a bit deeper levels of vertical integration. And in so doing, we pick up some of that strong revenue downstream. We get a higher credit for the value in the spodumene in the ground at Pilbara. We get the chance to diversify the locations where we're selling the product. It's not just about China. And that's also important over time. And then lastly, arguably the most important thing for our industry is lowering the carbon footprint. And we've learned a lot about this in the last couple of years as we've increased our engagement with especially European markets, where they are really sensitive to the carbon footprint in the supply chain to get to an end product. Each of those elements are really important to Pilbara Minerals' future strategy and our relevance to the market as a whole. So we then categorise those products. We think about what's happening upstream. So that's the spodumene concentrates. Think of it as beach sand with lithium in it. Then there's the midstream. Not quite a fine chemical. So it's not a product that's going to go straight into a battery. but it's got a materially higher lithium credit, so it's worth more to our customers. And then lastly, downstream participation, where it is a fine chemical, and working with key partners to motivate the link between the spodumene in the ground in the Pilbara and the lithium hydroxide that's so valuable downstream. So if I start there, one of the keys in the Pilbara story is the relationship with Posco. Posco, one of the world's largest steel companies, already heavily invested here in Australia, a fantastic partner, and now deeply invested in battery raw materials. Without wanting to put too many words in their mouth, they want to be the battery raw materials champion for Korea. And Korea is a really important market in the lithium-ion battery world because they're the next big mover beyond China themselves. And they're deeply integrated through to North American markets. All those steeped relationships and geopolitical alignments are crucial through the Korean supply chain. So we're really happy to be partnered with Posco. They're deep into the engineering and the delivery of the project that ultimately we're a joint venture partner in. And we'll be coming back to market with more information about the finalisation of the Posco JV shortly. Then we come back a step and we think about the midstream. I'm going to talk you through a little bit of technical detail that's really important. We've announced the release of a scoping study this morning as it relates to what's called the Calix joint venture. If you haven't looked up Calix, please do. They're listed on the ASX, Calix, C-A-L-I-X, a very, very innovative company that is aligning themselves to decarbonisation of key industrial supply chains, and lithium raw materials being one of them through their relationship with Pilbara Minerals. So the proposal looks something like this. Pilbara Minerals feeds spodumene to a plant at Pilgangoora. That plant is not a fines chemical plant, so it's not worth $1 billion. It's worth a lot less than that, but it doesn't produce a battery-ready product. When I think about mining companies and what it is that they do best, they're not very good at wearing hairnets, they're not very good at lab coats, and they're not very good at dust-free environments. In which case, what you really want to do as a miner is work with bucket chemistry. And we're pretty good at that. And basically, our midstream product is bucket chemistry for lithium. A relatively simple job. Take the fine spodumene using the Calix technology, turn it into popcorn so that you can access the lithium inside, get the lithium into a more useful product. In our case, we're likely to be targeting lithium phosphate, which is another form of lithium salts. But you take the lithium credit from 6% lithium to 36% lithium with virtually zero waste inside it. And that's what you ship to the rest of the world. The last thing, the Calix technology. They are electrifying something that historically has run with very dirty fossil fuels. And that's one of the reasons why the current supply chain for spodumene is not going to be sustained in the medium and the long term. There has to be another solution. And we think Calix has got one of the best ones. So that's why we're aligned with them. It's electrified, which facilitates the application of renewables. Really, really smart solution for the lithium raw material supply chain, and we're very happy to be working with Calix and making that happen over time. So that's an important project to us, and now well underway from an engineering, test work and delivery point of view. That's the next evolution of spodumene, and Pilbara Minerals is determined to be ahead of the curve. We are going to have the lowest carbon footprint in the supply chain. We're going to be delivering the most valuable product to Europe and the US, and we're going to have established new markets beyond China for our raw spodumene product. So, really important. That represents the future of Pilbara Minerals, and that's why I'm finishing on that note and very much look forward to the questions that are going to come. I didn't disappoint Rally with the hands, I'm sure. You've seen that en masse. Thanks, Paul. Look forward to all the questions to come.
Thanks, Ken. Please, anyone have any questions from the floor? We'd be delighted to take them. And also online, if you click on the Q&A tab and send them through, we'll get them to Ken. Gentleman up the back, Ken.
Ken, it's Michael Bennett from the Fin Review. Given what you've said about car makers probably having to continue paying through the nose for some time, I'm just interested in when you think demand destruction might kick in, given, I guess, the overall push to try and make EVs cheaper in general. And just a second one, if I could, given your long experience in the Pilbara, I'm just interested in what you made of the government's investment in the federal budget. I think they talked about $1.5 billion going into the region to try and make it, I guess, more than a global iron ore hub, but around battery metals and hydrogen. So just your thoughts on that as well.
Yep, by all means. Good questions. Yeah, there is going to be a challenge with respect to the cost of all the battery raw materials contributing to the cost of an EV. We're already starting to see this in China, especially because they're feeling it the most acutely because they've been the first to move in real price terms, because they're paying $70,000 a tonne plus for their lithium chemicals. Now, does that translate to demand falling away? My personal view is at least not yet, not at this stage, because there's still a lot to come in the EV industry as it relates to scale, the mind of the average consumer and their decision to buy the EV. And then, of course, there's the relative question. Well, yes, it's true that the cost of the EV might be going up, but I can assure you the cost of the ICE is as well. Every single car maker is suffering from inflationary pressure, whether they're making an EV or whether they're making a conventional car. For those of you that have been in the market for a car, you probably already appreciate that. It's not as though it's available on the showroom floor. You've got to wait 12, 24 months. Well, just try getting a Land Cruiser 300 series. And they're all getting more expensive. So I think relatively speaking, the EV is still okay. In the Western world, they're not paying $70,000 a plus for their lithium, at least not yet, because of all those legacy, longer dated contracts that the other global majors are delivering into. So that hasn't translated to a material impact in the cost of the Western EV, at least not yet. With respect to the Pilbara, I absolutely love it. The idea that finally they are paying attention to the engine room of Australia. It's not lost on West Australians, the significance of the Pilbara region, but I can assure you it's lost on the East Coast. They don't understand how important that region is to the lifestyle of every Australian. So the fact that they're finally prepared to pump what I think is, starting to look like real money into key assets in the Pilbara. Some of those relate to ports, roads, road networks, port access, but also renewables is equally important because the renewables, the value in the renewable resource in the Pilbara is also not to be underestimated. It's one of the world's great renewable resources. Solar intensity and wind flow are up there as to anywhere around the world. So if you're going to be investing in renewables, that's absolutely the place to be doing it. So good on the federal and to a certain extent the state governments for putting their hands in their pocket.
Ken, this midstream product of lithium salts at 35% lithium, or 35% lithium oxide, how big is that market and what are the hurdles to breaking into it?
Yeah. Also, really, really insightful question. Thank you. We are going to be recutting an existing supply chain. Now, it is true that there is some lithium phosphate sold in the market today. It comes from the battery recycling industry, but it's only a very, very small portion of raw material supply. So we have to bring the market along with us as we develop this project. And the method that we've chosen to deploy, the principal method that we're proposing to deploy to facilitate that transition is to build a demonstration plant. What the demonstration plant affords is a chance to proof of concept for the Calix technology, so renewably fired calcination using their technology. That would be part one. But then part two is also the product itself, having enough bulk samples that we can distribute these around the world and sell them on our BMX platform so that we get true price transparency prior to executing a full form of the lithium or the midstream project. So there is an evolution to come. It's going to take us sort of another two to 3 years to get there in terms of getting the market across the line in respect of this new supply chain. But we honestly think we're onto a winner because there does need to be change. The current spodumene solution is not going to cut it when you're delivering 95% waste to Europe and they have to store it somewhere in their backyard. Similar story, I think, in the US. What they want is the bare minimum of waste and they want a very, very low carbon footprint, and we're pretty confident we can deliver it to them.
Ken, we have a question online from Brett Hucker, who's a broker around town of some repute. He asks, Ken, what is your take on the fall in carbonate in the last week and the moderation in Chinese future pricing?
Yeah. No, Hux, good on you. Good question. A tiny bit of sort of blowback, I think, is probably the best way to describe the move in the carbonate price in the last 10 days. It's come off a fraction, sort of 1% or something like that. And I think that's probably the market taking a breather because clearly it had run incredibly hard. And you could imagine the likes of a CATL and a BYD and maybe one or two others who carry a lot of market power just saying, hang on, let's just take a breather here. This has all got pretty real and pretty extreme. So in part, it doesn't surprise me. However, it's teased out one more key point. Given the extent to which there has been underinvestment in the raw material supply chain, at exactly the same time as there's been huge investment in the midstream chemical, value-added chemicals, cell making capacity and EV making capacity, Hux, you tell me where you think the margin is going to get compressed. It is absolutely going to get compressed downstream because the raw materials are so far behind. You've got no choice but to lay that incentive price on the table. Otherwise, the raw material supply base will not grow. So in my view, whether the headline chemicals price in China is $75,000 a tonne or whether it's $50,000 a tonne, does that really materially change the value in the spodumene that we're selling? I don't think so. Honestly, the raw material guys, at least for the foreseeable future, are going to keep winning the margin because they are so far behind as compared to where demand is today.
Excuse me, Ken, Charlie Sorais here. I've got a question about, you've got lithium hydroxide and you've got the carbonate. The carbonate was, there's always a premium for hydroxide. And then there's a stage when they crossed over and they became more or less the same price. And I think it was because China subsidised LFP batteries. What do you think is the future of the lithium hydroxide, which is dependent on hard rock to be more efficient, apparently, as far as I know, anyway?
Yeah.
Do you think hydroxide will be in more demand, and in that case, it's more hard rock because the brines can compete easily, fill in the gap for the carbonate?
Yeah. Okay, so the question I think is probably in two parts. It's where the battery technology, where does that settle? Because that in part explains the demand for either lithium carbonate or lithium hydroxide. That's one part to the equation. So you're right in the sense that the LFP batteries have become a much bigger part of the market solution in China, and arguably they might yet also in the Western world for certain vehicles, low-range vehicles in certain markets. And in contrast, the hydroxide is typically serving what's called the high nickel batteries or a Tesla NCA battery or NCM battery. Now, the jury is still out about ultimately where the technology settles. I think I'm taking a view that sort of at least sitting on the fence a little bit to say each battery, form of battery, has its market, and there's a reasonable chance that over time they're both, quite big subsets of the market in their own right. So that's the first thing I would say. The second thing is, with prices where they are today, honestly, it doesn't matter. Because what will happen in practice is that people will twist hydroxide back into carbonate. And it's actually a very cheap job. You can do it for $200 or $300 a tonne, process of carbonation. And in so doing, your hydroxide becomes carbonate anyway. So you can be a little bit ambivalent about whether it was a hard rock source or whether it was a brine source of supply. So I know a lot of people sort of agonise over that question. From my point of view, I'm a little bit ambivalent about ultimately where the lithium gets used. The good news is all those batteries need lithium. You cannot thrift it, you cannot substitute it. So it feels like, we're in the right subset of the battery raw materials commodities.
Can the MOU with Calix is in early stages, obviously. Do you envisage a joint venture coming out of it, or more paying royalties to Calix?
Yeah, in fact, it's, actually by process, according to the current MOU, we move into the joint venture. So we envisage that being the next step. And the joint venture's intention is to deliver both the demonstration plant, but then ultimately a technology solution inclusive of the Calix technology with the midstream product, and market that to the rest of the world. Our view is that's much more likely to become a common industry solution as compared to raw spodumene. For all the reasons I described earlier, spodumene is probably not going to be tolerated for most markets. So we'd like to think we're getting ahead of the curve. And actually the test work is demonstrating that we're on the right path. The combination of the Calix technology being very powerful and very accurate in its calcination, and then the recovery rates that we're seeing to the midstream product, both very, very strong signals that we're heading down the right path, and hence the idea that we'll turn it into a JV and get on with it. Yeah, exactly. Yeah.
Ken, one more question, if we can, please. Online, someone's asked, when's the next BMX option?
Yep.
And will that become a more regular event?
Yeah, we would have, sorry, I glossed over it in my discussion during the presentation. It actually had been our intention that we would have run an auction by now, but we're realistically, we're a couple of weeks behind where we want to be. Some of that's motivated by the people issues that the whole industry has suffered from. And there might yet be a little bit more because of the community COVID transmission. So we are a little bit behind, but it shouldn't be too far away.
Can we squeeze one more question in? Short and sharp, please, sir.
Yep, just a quick one. Lithium and vanadium, two different applications. I'd just like to get your views on vanadium, actually.
Oh, yeah, no, I'm a big fan because... Yeah, it's one of those situations where it'll be horses for courses for the technology and its application. And what vanadium brings is the world of longer duration energy storage that a lithium-ion battery cannot. So what you get out of a lithium-ion battery, and the reason they're so fantastic for a car, is because they are very, very energy dense and can release their power and charge very quickly. That's the benefit in the lithium-ion battery technology. In contrast, in the vanadium flow battery is slower charge, slower discharge, but very, very long durations should you choose to. So I think it's a technology that's going to get a lot more attention and ultimately probably find a market. Yep.
Ladies and gentlemen, please thank Ken Brinsden. That ends today's presentations. Thanks very much, Ken. Thanks, Raleigh. Ken and Raleigh are here. I'm sure they'd be happy to for you to come up and chew their ear and have a chat now for a few minutes over a drink or a coffee. A quick reminder about the conference, please. June 7 and 8. We'd love to have you there. As one very successful investor put to me at the Gold Coast a couple of years ago, if you can't come to this conference and find 5 or 6 stories to make yourself some really good money, you shouldn't be in the game. And I thought it was a pretty good assessment. So if you'd like to come along, please register via the QR code. We'd love to have you. Thanks very much for coming today. To all those who joined us online, thank you to you too. I think it was a great event, and we'll be back in touch with our next one. Thank you.